Well, Atul Suri joins us. Let's take the conversation forward. Atul, these are, extremely delightful times for traders and for investors. Can I say that the momentum, the trend, and the strength is here to stay? Are we in for a good Christmas this time?
One doesn't know about dates like Christmas and Diwali, but the fact is that I do feel that we are in a part of a very, very larger bull market. The question, Nikunj, people I speak to, they have only one thing that, the markets run up too much and it is unjustified, it's going to correct. But what I really think is that we are probably in the first stage of a bull market. And the first stage, typically, when we go down back in history and see, is the stage of skepticism. There is such immense skepticism among domestic participants, it's unbelievable. And for that, you don't have to speak to 10 people, but look at the DII numbers. So in a market that has gone up 12, 13% this month, you've had record domestic selling. So what investors or domestic investors are doing is that obviously they have seen the well in the COVID when the fall happened. So now as the market is recovered, they are just hoping that they make little profits, or they're so scared of another dip coming or another crash coming. And in this stage, the first stage of the skepticism, you typically see such activities. You also see that the flows that are coming are not just in India, it is global. So there is a tectonic shift that is happening globally in equities. Unfortunately, on the domestic side, you find investors very skeptical. And typically in a bull market, in first stage is skepticism. Second is when there is acceptance. And third, that there is euphoria. There is hardly any euphoria in terms of leverage, in terms of, people piling on top of each other, standing in queues with application forms to put money. In fact, it's the other way around. There are net redemptions from domestic mutual funds. So I personally think that we have a long way to go. Till you do not have euphoria, you cannot have the top of the bull market.
Atul, why do you say there is skepticism? We are staring at record flows from foreign institutional investors, and this is higher than what we even got when India got re-rated in terms of a narrative in May 2014 when Prime Minister Modi got elected. I mean, that in a sense has been the biggest perception event for India in last 10 years when when Prime Minister Modi got elected. Flows that time were $6 billion in May and June, and right now they're higher than that. So obviously, FIs are excited about investing, and there is no skepticism from our good old foreign investors.
Exactly. As I said, that domestically, the skepticism is there. And globally also, money, Nikunj, that is coming is not that India is doing anything special or it's only coming to India. It is a global move that is happening towards emerging markets. So if you look at emerging markets, they have underperformed for almost a decade compared to developed markets. And what you are seeing is this whole easy liquidity or this whole gush of money now finding some path. What you are really seeing is a small part of that coming to India. And that is really what is reflected in the FI flows. It's not that suddenly the FIs have started falling in love with India. It's actually a thematic trade. The theme is allocations to EMs, and that is why we are seeing these kind of consistent flows. And in the face of that, as I said, the domestic investors are actually skeptical. And that I feel is very, very important, because that ultimately is a very good reflection of euphoria, bubble, leverage, and so on and so forth, which is very essential for us top to happen. So that is why, as I said, that every day I speak to people I encounter, everyone has the same question. Has the market run up too much? Is it going to crash? And I feel that we get very, very sucked into what we see around us, in the COVID world or post-COVID world. We are seeing that, yes, things are not great still. Still, people are getting euphoric about the markets, but a lot of businesses have not started, a lot of shops are empty, etc. And we think, oh no, this is all a fallacy. But markets are forward-looking, and the way the liquidity is ultimately what drives in. And that is where people are at a mismatch. And that is why I feel that a lot of domestic investors are going out. And as I said, the domestic redemption numbers tell you that. So I find a lot of mismatch domestically. globally the flows are more a function of a move towards EMs and nothing. So we are a part of a very large systematic move where the currency depreciates, the risk on trade happens, you see the movement that is happening in commodities and metals for that matter, and even EMs tend to be a part of that risk on trade.
Atul, the leaders of the bull market, which let's say started in April or May, are IT, pharma, Reliance. In the month of November, it is banks and autos, the other end of the market, which has taken it higher. Is that good news or bad news? Because the leaders in the market are not really driving it higher.
No, it's absolutely good news, Nikunj. In fact, in a bull market, if only few sectors or stocks drive the market, it very often ends badly. To have a sustainable long-term bull market, you must have market breadth. You must have sectorial breadth. And that is what it is doing. Like you mentioned, IT, pharma, etc., consumption related, they are resting this month. And that is okay, because you cannot have just 1, 2, 3 sectors driving the market. The rest of the market has to catch up. And this circular rotation between sectors, month to month or quarter to quarter, whatever period you have, is very important, because market breadth is a very, very good indicator of the solidity and strength. And when you have market breadth, also, Nikunj, remember that you will have participants at various places in the market also enjoying the benefits. A lot of people, we had a very good small mid-cap rally a few months or 2 months ago. And you'll realize that a lot of retail investors were stuck in that. And suddenly you found that they were very good returns. And that creates confidence. And that, in fact, sort of builds on for a bull market. So market breadth, sectorial rotation is fantastic. Look at sectors like real estate. I mean, perpetually, I think the last 5, 6, 7 years, the most underperforming apart from PSU banks. But the kind of move that you're seeing in those spaces, some of the PSU stocks, again, a perennially underperforming sector, you're seeing strength there. Metals, commodities. So I feel that the breadth of the market is a very, very big positive. And that is what makes me even more optimistic of the market as we are.
Absolutely. Atul, when you talk about the skepticism part, what do you think it will take to really change that, given that all the factors otherwise seem to be in place? Is it clear data points on growth, because we're already getting strong indicators from certain pockets? What do you feel is really going to help to change that last little bit of skepticism that perhaps may remain among domestic investors?
GDP growth numbers, etc., do not bring in investors. What brings in investors is a left-out feeling, because investing is more about emotion than just a statistical number. So I feel that as the market goes higher, the left-out feeling, which will at some point in time hit retail investors, and that is when you will find that all that money that is parked on the sidelines, because you look at your alternatives. What are your alternatives? Is it fixed income, where interest rates, I personally think, are not going to be falling much, or maybe not? Is it fixed deposits, real estate? The stocks are going up, but underlying themes haven't changed. So the alternatives for investors is very, very limited. And I feel that at some point in time, you will have this left out feeling. And the thing that brings money to the markets is the left out feeling. And I think that is something that will come. When it comes, what is the tipping point? We don't know, but it will definitely come.
You also talked about or touched upon the metals pack. I want to just get your view on commodities and the kind of revival that we're kind of looking at when it comes to buying in some of those segments. What's the outlook there, Atul? If we dive in a little deeper within the commodities pack, how would you go about it?
No, I think that's a phenomenal, that's been a very good trade for a lot of people. And the interesting part is the smoothness and speed of the rally. Commodities again is something which many people have ignored for years. And they have been very, very difficult, in fact, in longer term downtrends. And what you've had is a very sharp up move. We have a handful of commodity stocks in India, which are of some pedigree and quality. And if you really look at them, that they have done very well. Obviously, what drives them is the global commodity prices. So one very sensible way of playing them is to really keep a track or keep an eye on how the global commodity prices are moving. And that again is showing you a very good uptrend. So you are seeing a very big, as I said, risk on trade that is really bringing out a lot of flows towards commodities, emerging markets. On the contrary side, you'll find that gold, which was the safe haven trade, is actually corrected. And that really gives you an understanding of what is happening. Even crude, nobody's talking about it, and it does affect India because of the general euphoria. But crude has also rallied a lot. So Brent also has done well. So this is a complete risk-on trade where money is moving on to commodities. So it's going to help crude, it's going to help metals, it's going to have soft agri, etc., etc. It's going to move to emerging markets, which it already is, and India is getting its share. So this is really a part of a global jigsaw puzzle, and that is what is really playing out.
Yeah, and something unique, Atul, and I recall chatting about this with you the last time as well you were on the show, is happening within autos. What started with a big move on the rural focus plays like M&M Escorts is now rubbing off on the likes of a Maruti, for instance. Tata Motors has emerged as a very strong chart. Eicher is holding out well. Ancillaries like Bosch, Balkrishna Industries, all of them on a tear. What's happening here?
I think this is again another sector that's taken people by surprise. In fact, initially when I thought that this was just a dead cat bounce, but what you really go on to see is that they have continued to strengthen. So these are some spaces, which are intrinsic to the underlying economy. You have autos, you have metals, you have cement. So these are even cement stocks, they're doing very well. So what you are really seeing is this broadening of plays that is happening, and the market is positioning for an economic revival. And these are those sectors which, even infra stocks, you look at some of them, they have been underperformers for almost a decade, and they are really coming or emerging out of them. And when that happens, they have a catch up to do. So you are seeing markets at lifetime highs. These stocks still 20, 30, 40% away from lifetime highs. So what you are really seeing is a very big catch-up trade. And it's very important because you cannot have 2 or 3 sectors taking the market higher much. What you need is even the backup, the B team. Cricket is not only about the 2 opening batsmen. There are many other players, and even they have to score. So what you are really seeing is that the backup teams or the underperformers of many years are actually catching up. And the question is that as an investor, you really cannot be in one sector 1 month and another sector another month. That's okay for a trader. It's ultimately going to be your call that in the larger term move, beyond the months ins and outs, which will always happen in the market, what is that sector or theme which I really think is going to really outperform and be the biggest wealth creator on a multi-year basis as it plays out?
Interesting. Help us understand, Atul, what's happening with Reliance. From those 2360 odd levels, it's fell sub 1900. A lot of question marks on a fundamental basis being raised on whether all the good is already in the price or not. Do you sense that the stock could go into some time-wise consolidation?
I think so. I think that is exactly what is happening. You cannot write off the company by virtue of the new economy businesses that it has got into and the success it has made out of it. I think globally it could be a case study of a company of this size moving away from old economy to new economy, and that also pretty successfully. So I think that Reliance is going to be an integral part of Indian economy, especially in view of the move successful into the new age businesses. So you may have a time-wise correction, what you rightly put it out, but this is a stock you cannot ignore because when it moves, as I always say, that Reliance is a sector by itself. It almost has sectorial weightage or a sectorial footprint on the markets, and the time will come. So I think you just need to be a little patient, but it definitely has done dramatic work in the last few years, and that is why you will find a reflection of that in the stock also in the years to come.
Atul, okay. I'm going to go back to the initial point. A flash is there on our screen. Atul Suri believes markets have a long way to go. So if markets have a long way to go, And if Nifty has to eventually move from 13 to 15,000, does it happen till December or next March? We don't know, but we know directionally we are headed higher. What will take the markets higher? Are we in for a period like we saw in 2003 to 2008, where the market was in a sense led by commodities, industrials, cyclicals? So what are the defined leaders of this bull market of 2020?
So, Nikunj, I feel that what will determine, that's a point I made earlier, that what are going to be the ultimate leaders in a bull market. And the fact is that, there is no sure shot way. What really matters is that what sectors or what companies continue to deliver numbers quarter on quarter. So with the little, foresight that I have, I feel that sectors that are resting right now, where a lot of others are catching up, will ultimately go on to be leaders. Because globally, what one is seeing is the whole move towards tech. And I don't think that tech can, in India, be unaffected by it. You are seeing a global move towards incremental allocations for healthcare. So I feel that this is another sector that is going to play out very well. What I also feel is that there is this, move away from manufacturing in China. And there are a lot of themes like specialty chemicals. I personally think in the last 5 to 10 years, the best sectorial or thematic move in India has been specialty chemicals. There are very few stocks or small stocks, so nobody talks about them. We don't have a sector index. But you can go back and do any statistical analysis. In the last 5 years, specialty chemicals has been one of the best themes. And this is another theme which is moving manufacturing away from China. So I feel that a lot of other such stocks that are there will also be a very, very big theme. And again, I'm not discounting the fact that you will have catch up. Stocks like infra, stocks like real estate, they have underperformed for a decade. So they're bound to catch up. And you will have phases of the market in which you will have the leaders re-emerge, and then you will have a small or mid-cap move. And that breadth, as I mentioned earlier, is what really gives me confidence that this relay race, if somebody has to run 1,000 meters versus 5 runners running 200 meters, the 5 runners running 200 meters will be much faster simply because you'll have a fresh pair of legs rather than one guy run 1,000 meters. So I think that this relay or this passing of baton is very, very important for the market. And traditionally, we have seen that this is how really larger sustainable bull markets happen.
A common friend, Rakesh Jhunjhunwala, always uses the following, that big gains are made when you identify something which is beaten down, completely thrashed, and that's how a bull market starts. Is there making of a big bull market in select PSUs? It may not be across the board. I completely agree. But let's say a BEL or a HAL or an EIL. I mean, do you see evidence of a big move coming in some of these disregarded names? I would like to throw SBI also in that basket.
It is possible, but it will be very dependent on government action. Just because they are PSUs and beaten down, they are not going to go up. The fact is that you will have to see some sort of government action, and this has been a perennial potential trade. Just to take this argument further, I feel real estate is a very interested sector. Again, qualifies for all those things that you talk about. Extremely beaten down, unloved, crisis, etc. In fact, in the vortex of the crisis. But I feel that in that space, again, a few real estate stocks look very, very promising to me. So I feel that you will have, just as you mentioned, some PSU stocks. I think you will have a few real estate stocks. You will have a few plays in the infra space also. Again, since 2008, they've done nothing. They have done nothing for the last decade. And you will find that there also. But the important thing is stick to quality, stick to leaders. Because we know that how markets have a way of surprising. And markets will correct, which they will. When they correct, you'll find that the pain in poor quality is so much that very often it upsets you or unsettles your portfolio. So whatever you do, whatever theme you play, stick to quality, stick to leaders. Because that really is what has worked in the Indian context for years. You may have periods of excitement, or periods of trading in other spaces, but ultimately stick to the best. Whatever the beaten down theme or the strength, whatever you're playing, ultimately stick to quality, stick to leaders. Personally, I feel that is how there is a better potential to create consistent wealth over a period of time.
Atul, you're sounding so upbeat on certain pockets of the market where you feel the beaten down pockets, where momentum plays, commodities. How would you suggest someone go about their portfolio currently? Would you take the top off some of the IT pharma names? I know you said stick to leaders, but if someone's looking to perhaps be a little risk on and get into some of the segments you've mentioned that could be part of the bull run going forward, what do you think an ideal portfolio would look like?
So I wouldn't take money out of IT and pharma. In fact, I feel that they're correcting and may give you opportunities to add on in case you missed. Because ultimately, as an investor, you have to understand your time frame. Like I am someone who invests multi-years. So for me, this trend or rally is not about 1 month or 2 months. It's about multi-years. And for me, the objective is ultimately to identify those sectors or themes, which I think at the end of this period, which will be 3 years or 5 years, nobody knows, are ultimately going to be the biggest wealth creators. So I don't churn my portfolio in my PMS month to month. I'm not a high propensity churn. I'm one of those compounding kind of stories. And the objective is to ultimately identify 3-4 themes. And if you get the themes right in any bull market, like I'll give you an example. In 2000, we had a market that doubled. However, you could have made 1,000% if the theme was right, which was IT. Between 2003, 2008 was infra. If you had infra, the theme was right. If you were owning IT stocks between 2003, 2008, it would have meant nothing to you. The last rally up to 20 was financials. So I feel that every bull market has a theme. And I personally think that going ahead, the themes that will dominate will be technology, will be healthcare, will be specialty chemicals and such other places. But yes, there will be money to be made in other spaces, because when you have a broader bull market, which you are seeing right now, you will see wealth being created. And each one will have to choose stocks which suit their style. Like look at what has happened to banking this month. I mean, unbelievable. When have you had a 24, 25% move in the bank Nifty in 1 month? So I think that as a trader, if you can churn, that will be great. But I am a trend investor, and my job is ultimately to create wealth in a 3 to 5 year time frame and identify those trends which I feel will be compounders, because that is really what my mandate is, and that is what I really set out to do. So you will have themes, you will have cyclical plays. As I said, the relay race will keep happening. Leadership will keep changing month to month. But the objective is ultimately to identify that big mega trend and be able to ride it across, where I feel, and I have seen in the past, that super profits are created in bull markets.
Amazing, Atul. Thanks so much for joining us. It's always great speaking with you, and great also to hear your views as we're at this start of this new run. Thank you. Have a good day.